Good day, everyone, and welcome to another week of the AI Observer. It's Matt here, and today we're going to be running through quite a simple example of how to write a VBA macro code that's going to be able to pull live information, in this case the stock price, from a website. We've chosen Yahoo Finance, and that's going to be based upon a specific input. In this case, that's going to be the listed company's ticker to uniquely identify that company for which we're going to pull the share price. Now, before we dive in, let's talk about some of the potential use cases. I see this being extremely relevant for those finance professionals, potentially in investment banking, in mergers and acquisitions. There's a range of use cases, and hopefully today you'll be able to see the very basic principle of how to pull one figure, i.e. the share price. Once you're able to do that, you essentially follow the exact same process to pull any other financial information about that company. Now, if we think about it in terms of a use case and potentially building out a full model, let's think about potentially forming a discounted cash flow model. Right now, if we have a target company for which we're trying to value, we're able to use the internal financial info for that company to build out the first part of our discounted cash flow, i.e. to get to our free cash flows. Once we've got to our free cash flows, we're going to have to look at market data in order to determine an appropriate discount rate for those cash flows. So if we look at the weighted average cost of capital formula in a bit more detail, we know that a component of that is cost of equity. Now, the cost of equity can be calculated using the CAPM formula. And for those that don't remember what the CAPM formula is, it is essentially our risk-free rate plus our beta of our target company times our market risk premium less the risk-free rate. Now, it's this figure over here that we are most concerned about, and that's relating to the additional risk specific to this type of company. And that figure is calculated by looking at the closest comparable companies and bringing in their beta, unlevering it and levering it back to the capital structure of our target company. So when we do that, we can now see, okay, well, if we're able to pull figures from the web, from Yahoo Finance, live details, then we are able to pull tickers for a bunch of comparable companies for our target, determine an appropriate average cost of equity, and then apply that into our WACC and discount the cash flows accordingly. So that's just an example of a potential use case for the finance professionals, and something that I've been working on to try to build out an even bigger model. Now, with that being said, guys, please look at the newsletter. I've included some links on some of the software or the drivers that you'll need to download before diving into some of the coding. So please have a look at those files, download them, and I'll see you in part 2.